Hello, you are listening to the OmniTalk Retail Fast Five, brought to you in partnership with the A&M Consumer and Retail Group, Firework, Trigo, Sezzle, and Silk. Headline number one, Walmart and Home Depot each reported earnings this week, and here are the big callouts. First, Walmart, according to Retail Dive, comp sales were up 8.3% and e-commerce sales grew 17% in the US during the fourth quarter. However, Walmart also lowered expectations for 2023, saying it expects US comp sales only to increase between 2 and 2.5% for the balance of the year. We have Home Depot also reporting earnings results here. And while overall sales growth for the home improvement retailer was tepid at only 0.3%, the most interesting aspect of the release was that Home Depot also said, again, according to Retail Dive, that it will invest an additional $1 billion in annualized compensation. Yes, for frontline hourly associates. Chris, what are your call outs from these two earnings reports? What do they tell you, if anything?
Well, first, I don't think I've ever gotten the chance to go $1 billion before on this podcast, too. That was kind of fun. All right. So
I'm glad you enjoyed that.
Yeah. Anytime I can channel Dr. Evil, it's just always a good thing. It's just a good thing. All right. So normally, Ann, to answer your question, I loathe commenting on earnings reports. So I'm always excited when they run in tandem with when A&M's on the show, and we generally let them do it, but that didn't happen this time. So we're going to do it today. But this time I would tell you, I think there's some pretty compelling info to glean from them. So I would call out first Walmart. Walmart's earnings reports tell me, as we've long suspected, that the sales growth that they're seeing looks to be coming solidly from grocery and from inflation. I think there's no doubt about that at this point. And now that we're anniversarying those numbers in 2023, growth is going to be harder to come by. That's essentially what they're saying, which puts a lot of their other recent news in a different perspective. For example, we talked last week about the tech hub closures being a reskin or another way of talking about layoffs. In reality, that's probably what they are. And then this week, we also saw that they divested Moose Jaw, selling it to Dick's, which says to me that Walmart is trying to conserve cash and that move is probably honestly quite smart. We've talked about the Moose Jaw acquisition and all the other acquisitions like Bonobos, going back 3 or 4 years now. But the Home Depot story, Ann, to me is even more important because it tells me that the economy is still overheated. Yeah. Here you have a company raising its actual minimum wage, not the average wage, as many people report, like Walmart likes to report that, but the actual minimum wage to $15 an hour. Once they do that, everyone else is likely going to follow along because the opportunity cost of a worker taking a job as a sales associate in a store compared to driving an Uber or making an Instacart delivery is still just too high. So mark my words now, but I think the earnings announcements will get even more constrained in the months and quarters ahead for that reason. That's my take. That's why I think this is important to watch.
Yeah, I agree. I mean, don't have too much to add here. I think just on the Walmart front, I think it's interesting that we're hearing from Walmart that they're getting the high-end customer, that all the big spenders are coming to Walmart to try to save money here. And I don't know if I believe that 100%. I don't know that that's a consistent thing. Like, yes, maybe there's some people that are exploring and trying Walmart from that sector. But I think that at the baseline here, you're still talking about two massive retailers here in the US. And what they're doing and what the changes that they're seeing will likely be impacting other retailers across the US similarly, especially the Home Depot call out, I think here is really something for people to watch, especially as, these gig companies are trying to find ways, to even increase what the shoppers, like we saw Instacart this week, trying to figure out ways that they can increase revenue or how much shoppers are able to make on top of the, $20 to $25 an hour. So that competition is still going to be there. I think what kind of investments are we going to see from the Home Depots, from the Walmarts here to try to invest in getting better resources here, whether that's minimum wage increases or, what we're seeing from Walmart, increase in investment in technology to kind of make that store experience better, to be more efficient in store too. So I think net for me, it's what will these earnings reports mean for what we're likely to see in the coming months from other large mass retailers as well.
Yeah, the third part that you just made me think of too is I think the other thing the Walmart earnings report tells me quite clearly, and I've been thinking about this a lot for something I'm doing tomorrow, is that Walmart's pretty much defended itself on the grocery turf from the onslaught of Amazon at this point. Like, you have to wonder if physical retail is really in play for Amazon, and Walmart's done a good job there, especially in terms of this inflationary environment of keeping that strong core grocery base alive, regardless of whether the growth is fueled. They've kept it alive, and I think that's an important thing for people to recognize as well.